Hey, this is Matt from InvestiQuant. Today is Tuesday, August 24, 2021. We've got a quiet day shaping up here in the markets. So far, we've just got 10.5 points of range in the S&P. So it's been fairly quiet coming on the heels of a nice strong rally over the past handful of sessions. And we are trading at all-time highs right at those levels. So what we're going to be looking at this afternoon is what has happened historically when you are trading up at 52-week highs with a quiet range. So yesterday, the S&P closed at a 52-week high. Today, we are trading above that 52-week high and in a very quiet fashion. Let me go ahead and set that up here in Discover. We're going to select all four instruments and use a time-based entry that will get long near the end of regular trading, which is about 3 o'clock here. And that'll be 3 o'clock Eastern time, as the entry and exit will be set to 4:15 p.m. Eastern time. Now, to describe the action that we're seeing, I'm going to use two different key filters here within the post-open filters. I'm going to add one more from the price patterns library. In fact, let's do the price pattern library first, just to kind of set the context of where we're at. So the first thing I'm going to select is yesterday closed at a 52-week high. So that's available in the new highs category. It's also available in the active today section. I'm going to grab it from the active today section right there, day after 52-week high close. And then I'm going to go back into the post-open filters, and I'm going to describe the intraday action that has taken place since then. And what I'm going to say here is that as of 3 o'clock, we are trading above that prior close, which was a 52-week high close. So to do that, in the intraday close versus daily levels, I'm going to hit equals for above prior close. That'll add that information to the test. And then the other piece of information that I really wanted to add to this is we've got a really quiet range that is forming today. So our current 5-day average true range, which is a way of a method of measuring volatility for the S&P, that's about 52 points. And right now, we've only got 10.5 points of intraday range. So what I'm going to do is I'm going to come into this intraday range size as a percentage of the 5-day ATR. And I'm going to say that the range is less than 50% of the 5-day ATR. And that's going to measure the intraday range between 9:30 a.m. Eastern time and the time of entry, which I've got set to 3 p.m. Eastern time. So within almost all of the entire trading session, since this is entering near the end of the session, almost all of the range is in for the day, and it is still just half of the 5-day ATR. So I've got that selected. Now I can click View Results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern time, exiting at 4:15 p.m. Eastern time, when the prior session closed at a 52-week high, and at 3 o'clock, you are trading above that closing price from the prior session, and the daily range is less than 50% of the 5-day ATR. So you've got a quiet range forming up at 52-week highs. Historically, we've got 85 samples in the S&P to look at dating back to 2003. The NASDAQ has 70, the Dow 72, the Russell 41. The win rates on these are just mildly favored. So S&P coming in at 53% of these have continued higher into the close. For the NASDAQ, it's a little bit stronger at 59%. The Dow coming in 54% and the Russell at 56%. So none of them are weak. They are all either neutral or slightly favored there on win rates. And the average win for the S&P is quite a bit larger than the average loss. That's also the case for the NASDAQ. For the Dow and the Russell, the average losses are a little bit larger than the average wins. So not a real strong pattern. The equity curves are spiking up a bit here, especially in the S&P. You can really see that here. Let me just hover over that S&P. You can see the equity curve here, specifically for the S&P 500. You can see it's been going higher here, especially since about 2020 or so. It's been quite a bit stronger than it was historically. So let's just look below. Last year, 16 samples has been a little bit stronger than the overall sample size. Last 5 years, it's about a 60% win rate. So long term, you're looking at 53%, but the past 5 years has been closer to 60%. Last handful of trades, the last 6 have all continued higher. So definitely short term, it has been stronger than it has been longer term. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.